Hello, traders and everyone. The markets just shut today. Is the 16th of June 2020. It's 4 o'clock in the evening. Markets just got shut after a wild swing on both the sides, thanks to the news on the front of Indo-China conflict. Nevertheless, the index managed to bounce back pretty well towards the close. Let's see what's in store tomorrow. But this video is about my views on whether you can manage and handle both your full-time job and trading simultaneously or not. Now, I do get this question asked almost every day by some messages or emails or even calls that I'm a working professional and I've been doing this for a few years. I'm looking forward not to continue this any further in the near future, and I would like to take up trading as a full-time endeavor. But it's been so many years I've been working, and I've got so used to the environment that I've created for myself that I'm not too sure whether it is worth the risk or not, or whether I'll be taking too much risk. My family members, friends, and everyone is not motivating me to take such a big, risky step. So, is it possible or not? So I thought that let's quickly make up this video. I had jotted down a few points today morning so that I can make this video and my explanation as to the point and crisp as possible. So the first thing that I would like to share is essentially would like to talk about the pros and cons of if you take up trading and you're doing the job side by side. Now, the pros of the fact that you are in a job is you got a source of income, you got a steady source of income, and so you have much less worry in terms of paying your bills or taking care of your standard of living. You don't have to think or approach the market tomorrow that I have to make so much money so that I can pay my bills and maintain my standard of living. So when you're in a job, and if you continue to stay in a job for a longer period of time, your roots go deep. What I mean to say is that you get a lot habituated and used to the way that you turn your resource, which is primarily your efforts and your time, into money. And so the main strength of doing a job, a full-time job, is the kind of stability which you think there's a stability, and the source of income that you get used to it. See, when you're doing a job, you work 30 days, you get paid only one day. And when you're trading, every day is a new day. So 20, 21 days of trading in a month, anything can happen in those 20 days. The positives is the fact that if you're doing a job and you're thinking of taking up trading, your approach should ideally be at the beginning passive. What I mean by passive is that you don't need money per se, right? Of course, everyone needs money, and if you have a little bit of money, you would want a little bit more. But what I mean here is you're looking at trading and investment as a secondary source of income. And if this secondary source of income becomes pretty consistent, and if you're good at it, then it can later become my primary source of income. But to begin with, you're not under any pressure that you have to create a source of income actively right away. So it's essentially your approach is a passive, so you can essentially devote most of the initial stage to learn, and learning can be your priority, and not essentially try and deliver and earn right from the beginning. So if you have a job, and let's say you've been into the industry, whatever industry you are into, for let's say 8, 9, 10 years or 5 years, then you more or less you're steady. But if you've been into the job for let's say 20, 25 years and more, then your roots go so deep, and the ability to take the risky step becomes more and more difficult. The The negatives, if you're doing a job and you're looking at trading, is first and foremost the lack of dedicated time. You will not, of course, be able to devote your entire resource, time, attention, energy into trading. Trading will come second. The primary thing is learn how to trade, right? And of course, the the clarity, or I would say the confidence of deciding that okay, my trades and my trading is going so well that I'm confident that I can make the kind of money that I'm making currently from the stock market or the financial markets. This confidence will only come with consistency when you yourself see your own ledger consistently going up, and most of the trades, most of the analysis and the bets that you're taking are going in your way. That gives you the kind of consistency. And if you're into a full-time job, this consistency will come very late, if at all. Because what happens is you're in a job and you're trying to parallelly trade, couple of trades might go wrong, there's some news, the markets opens up well, you're feeling good, then post the lunch there's some news, the market tanks 150 200 points, your stops get hit and you feel demotivated, and you say what the hell, let's focus on my job and this is not for me, and you chuck it and you leave it. So the way to deal with this is to come back again and trade tomorrow so that you end with better trades. Clarity, confidence, consistency, these things may come to you late because of the fact that you're not being able to participate at the rate at which a full-time trader will be able to. Also, the lack of time, energy, and resource that you're putting into the entire um, curve for you, the learning curve for you might take far more time. Of course, this is very obvious because again, it all boils down to the fact that how much time you're able to dedicate. Now, the thing is, you're working 9 to 5, let's say, and the markets are open 9 to, if I talk about Indian equity markets, let's say 9:15 to 3:30. So they are more or less overlapping. It's not that you're trading only the MCX in the evening and you're working in the day. That's too taxing. But uh, your own curve of learning, implementing this knowledge into trades, seeing your trades going your way, which gives you confidence and consistency, this entire process may be extremely time consuming, and it's likely to be quite a bit of time consuming for you. So how to deal with this? What should be the approach? So I've listed down few do's and don'ts, but before that, one most important thing that I should share with you before I go to the do's and don'ts is it's possible. It's possible, and everyone who's serious about his own money, either you're doing a business or a full-time job or even a part-time job, should always invest, save, and maybe trade, because you should always have a second line, a third line, or a fourth line, different sources of income. And if these sources of income are uncorrelated, it's better. So let's take you to the do's and don'ts, and I have quite a long list for you. I'll talk about one do and one don't side by side. So first do's for you is trade only the daily time frame, the daily chart. Okay, you've learned how to trade, and I'm making an assumption, me being a technical trader, I'm purely talking from the perspective of a technical trader looking into charts and trading, and not news or fundamentals or any other avenue. So please do not trade these smaller time frames. Don't do 5 minute, 15 minute, or even 60-minute time frames, because in shorter time frames there will be noise and volatility. You will be uncomfortable. You will be in your office trying to work, or in your place of business trying to focus on the work in your hand, and it will not be possible to do that if you trade a smaller time frame. If you want to trade a smaller time frame side by side your business or work, I would say don't do that. Definitely not. You will not be able to do justice to either of them. Um, Second point under do's that I have is homework or preparation. extremely important. I would say if you really want to do good, I believe this really strong that most of the winners or the winning trades are done not during the market hours but before the market opens, that is during the preparation or while doing the homework. Now, I'm not going to be very expectant out of you, but try and every day put in at least 30 to 60 minutes, either in the evening once you're back, or late night, or early morning. If you ask me, the best time would be early morning the next day. Please do your homework. Now, at the learning stage, homework would be learning about the concepts, techniques, paper trading. And as you gain that confidence, the homework would be picking up the right trading stock or the index. And then what you do is you keep your orders placed. You don't track the market when you're in your office. Before 9:15, you should have written down all the stocks that you want to trade, either on the long side or the short side, depends. The levels, the quantity, all the decision making should be done pre-market hours. You should place your orders yourself or tell someone else, or you can put it in your system, and then you should focus on your work. Now, when you're at your work, do not check your open positions often. Yes, you can check it once in a while, maybe uh, post your lunch or before your lunch, and in the afternoon, how did it close when you step down for a smoke or have a tea or coffee, whatever it is. When you're not working, when you're probably taking a break, that is when you should or you can check your open positions. Back of your mind, your understanding, you should tell yourself, I have done all my homework and preparation and decision making in the morning. I have placed the orders. I know if this thing happens, the stop loss gets hit or the target, I know what is the possibility of my trade. So there's no need to check it. Trust me, if you check it often, the chances of your profits coming down is higher. Focus on the homework, focus on the work, and leave it to the market. Also, uh, how often are you going to check your position when you're in your office is a big function of how big risk are you taking. Please don't take big risk. When I say big risk, it's relative, but try and risk that amount of money which you're willing to bet or even lose, so that it will not deter you. If you're in your office in the meeting and you know that a trade is going on which is, let's say, minus 50k or 80k or 1 lakh or 1, whatever is the money, it's the big word is very relative in this sense, but it should not bother you. It should be an amount that you can comfortably continue doing your work, focus and concentrate on what you're doing without having the urge to open your laptop or your phone or your tablet to check what is the PNL or M2M right now. The big function of this is your bet size. How much are you risking? Now, coming back to the do's, please manage a trading journal. This is for everyone, whether you are doing a job and parallelly trading or just trading full time. But managing a trading journal is extremely important, especially when you create it on an Excel and it grows over months. And after it say crosses like 12 months, like a year, it's like a gold mine, because it will clearly show it to you how you have progressed, which are the months and what kind of trades you have done and the mistakes you have made. It's like a very good continuous self analysis that you'll be able to do if you maintain a trading journal. Very important. um, Limited number of positions, please. This is also something that I would suggest, that you should not go into too many positions, because uh, remember that you're not being able to put in your maximum bandwidth. So, as because you're not able to put your maximum bandwidth into trading, you should want to keep your position, number of positions, as limited as possible. um, Scale up slowly. So don't be stuck into the same size of the trades that you're doing. You'll be starting off small. You should start off small, and slowly every quarter evaluate yourself. Take up over the weekend when it's a holiday for you. Take out an hour or two. Shut yourself inside your room. Tell your family members or friends not to bother you. Keep the phone on the airplane mode and evaluate yourself, and try and come to an answer. Am I ready to scale up? If yes, then scale up slowly. You need to scale up. Remember that, or else if you're stuck in the same bed size, it's going to demotivate you. Also, before I go to the don'ts, is try and stick to only few setups or strategies. One or two strategy is enough. Please try to understand you don't have your full bandwidth that you can give to trading. So it's very difficult to juggle three, four, or five, six different types of setups. I personally prefer the swing setup, but it's up to you, depending on your learning, your understanding. Please stick to only one setup. Now, when you decide upon one or two setups, there will be phase of the market where there will be no trade zone, because your setups is such that the current market environment does not meet the criteria of your setup. So you should be completely okay that during a phase in the market, let's say a few days in a month, I will have scratch days, no trades at all, and you should be completely okay, because sooner or later your time is going to come. um, do not talk about your positions, especially don't brag about your positions, especially with your colleagues and friends. I've taken up trading and I'm just thinking I'm going to leave job soon and take up trading. It's been going good. I've done this course, I've done this, I have so many lakhs of positions open. Please don't. It's no one cares, number one. No one does, okay? And it's not about telling or showing it to anyone. The most important thing is proving it to yourself first. That's the most important thing. See, if you have the mentality, the thought process is like this, that I'm doing a job and soon I want to flip the job and I want to trade from the comfort of my room. Number one, I'll tell you, your job is far more cushier, comfortable than the full-time job. Trust me. Okay. But uh, your mind will work in such a manner that the first benchmark that you will have is how much salary am I drawing from my job, and can I make or match this amount from the market or not. This is a typical thought process, and I don't blame it. So first and foremost, when you start trading parallelly with your job, do not try to match or beat your salary at the beginning. Please don't. Because trust me on this. You will be able to beat the salary by a very wide margin only at that point of time when you have that consistency. And how will that consistency come? The consistency will come once you have the confidence. And how will that confidence come? The confidence will come once you have your clarity in trading. So you have to learn, understand, evaluate, and then start some paper trades, shadow practices, then start trading small, maintain the journal, month one, month two, like this, maybe 6 months, maybe 12 months. A time will come after a certain number of trades where you will feel consistent. The moment you feel consistent, you scale up. When you scale up, the beating of your salary and 2 times, 5 times, 10 times more of your salary can happen. But if you try this at the beginning, trust me, it's not going to happen. No matter how hard you try, no matter how many courses you do, no matter how many platforms or softwares you buy, it's never going to happen. Now, I don't want to demotivate you. As I said, that it's possible. It's highly, highly possible. In fact, I had the privilege, and I'm fairly grateful to have interacted with so many people in my career so far. Youngsters in the age bracket of, let's say, 17 to 23, who take up trading right from an early age. Then there's a lot of people in the age bracket of 35 to 45 who are planning to leave up their job or who have left their job, etc. But out of my experience, from myself and others with whom I have interacted with, I would like to share a trick with you. Okay, this may work for you. I think that essentially it's all psychological. So you have to essentially wire your brain in such a manner so that it works for you and not against you. So what you should do is, at the first, try to make monthly what you used to make from your first job. Say, let's say, I'm just trying to give an example. Okay, so let's say you're 35 years old, and you've been into doing a job for the last, let's say, 12 years. From, let's say, 24 or 23 years old, you've been doing. So you have 12 years of work ex. Now, making an assumption that, of course, these 12 years you're not in the same company, or even if you're in the same company, all the 12 years your yearly C2C or your salary is not the same, right? So the trick is, before you start up trading, that let's say you've done a course or you've read a book, now you understand, you've done paper trades, and now the day comes that, okay, I will start trading from tomorrow. If once you reach that stage, you ask yourself, what was my first salary? The salary that you drew the first month of your first job, how much was that? Let's say 10K. You know how much was mine? 4K, 2002. Anyways, 10K. If 10K was your first salary from your first job on the first month, your objective is, can I make this from the stock market at least? And don't force yourself for the first month. It can take 1 month, it can take 15 days, it can take 45 days. But tell yourself, first, let me prove it to myself what I made out of my salary on my first job. Can I take it out from the market? And at the beginning, I'm repeating again, do not give yourself the hurdle of, I have to do it in a month. Don't force yourself. Just have only one point focus, 10K, my first salary. The moment you get this, and you will, if you are, again, you have the clarity, confidence and consistency, you will sooner or later. If you get this, then you tell yourself, okay, then I moved on to company A to company B, or in the company A, I got a promotion. How much did I go up from 10K? How much was I drawing? Let's say you were drawing 14K. That's your next target. See, what I'm trying to tell you and what you're trying to trick your mind is, if you are trying to substitute the salary that you're drawing right now from the stock market and the salary that you're drawing right now, the position that you've reached today in the society today, it did not happen in a day or a week's time. It took time, energy, resource, blood, sweat, tears. How can you expect that you're going to get it in a jiffy from the stock market? This is not a coffee machine, an instant coffee machine. So please put in at least some amount of blood, sweat and tears there, and then it will come. But because it's about money, because stock market is all about money, 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 people want to make a lot in a very small span of time. It's possible, but it's also dangerous. That's not your objective. So please tell yourself, I want to map my experience, my trade from the stock market in the same manner, and I'm going to put some milestones that I'm going to reach. Okay, my second job where I used to make 14K a month, I've crossed it. Once you start making a little bit, the only thing you will try for is this and not more. Say, what I mean by this is, once you make 10K in 15 days or even the first day, you don't try that, okay, I'm going to make 60K or 80K or whatever. Your important thing would be, can I make 10K more? So every 10K, you are like a brownie point. So let's say if you make 10K 3 times in a month. So then what it tells you is, by trading, you made 3 times of the first salary that you drew. And like this, slowly, with consistency, with scale up, with learning, and this journal that you will maintain over a process of time. Again, as I said, it's going to take some time. It's not going to be that easy. You will reach a stage where you can see, yes, if I can do it in 1 month, why can't I do it the next month? Or even if I fail in the next month, when I average it out over a period of 12 months, I should have some consistency. This is the most important thing. I've seen so many times making 10K or 14K or 140K a month is no big deal. But making the 140K consistently month after month or week after week, that is the most important thing. Once you reach there, you don't need me or anyone else to tell you that leave the job and do this for a living. You will have the confidence to do that. Once you have that answer coming in from your gut, you don't need anyone else's confirmation. Just one thing that I would like to tell you, of all the points, Try and keep your plans, your trades, your approach to yourself as much as possible, because this is about you versus yourself and no one else. You don't have to prove it to your parents or your spouse or your siblings or friends or no one. It's it's completely personal. This is how you decide and you define yourself. So I hope this was useful. Share your um, feedback on this. There are many traders whom I have interacted with who have shifted, they have crossed the line and they have left their job and they are now trading successfully for a living. If you're one of them, please share your story with me so that I can also learn. And in turn, when others approach me, I can also share your learnings so that others are benefited. Again, I hope this was useful for you. Thank you for listening to me and watching my videos. Till then, as I always say, trade well, trade well.